Here is the number that should stop you in your tracks. Silver touched a record above $121 a troy ounce in January, and today, August 18, 2026, it is trading near $65.50. That is a brutal fall from grace. This morning XAG/USD gave back ground after 2 days of gains, slipping to around $65.60 during Asian trading. The trigger is not a simple dollar story. It is the collapse of confidence in the US-Iran peace process. So why is silver falling when geopolitical uncertainty is rising? Because in this particular shock, the safe haven bid is flowing into the US dollar, not into silver, and that matters for every trader watching this move. Let us map 3 developments that changed the tone overnight. First, President Trump said he is not seeking an extension of the Iran Memorandum of Understanding. Second, Tehran has demanded that Washington lift its maritime blockade, which means neither side is backing down. Third, the dollar index is holding ground on safe haven flows, which directly pressures dollar-priced silver. At the same time, CME FedWatch shows expectations for a Federal Reserve rate hike have fallen to 35%. That should normally help non-yielding silver, because lower rate expectations reduce the opportunity cost of holding it. But today the geopolitical risk is dominating, and the dollar is the preferred shelter. The result is a silver market that cannot hold its bounce. There are 2 very different forces pulling at silver right now. On the investment side, Monday's rise to $65.46 looked like a genuine recovery from Friday's $64.70. But today's failure to keep those gains tells you that buyers are not confident enough to chase the market higher. On the industrial side, silver is heavily used in solar panels and electronics. A prolonged US-Iran standoff raises supply chain uncertainty, especially with China's economy slowing in July. So silver is caught between its safe haven role and its industrial demand role. The practical meaning is simple: this is not a calm market. A metal trading at $65 after touching $121 in January is in violent repricing, and that volatility can cut both ways. Looking ahead, the direction of XAG/USD in the next few days is likely to be determined less by technical charts and more by 2 catalysts. The first is any shift in the US-Iran rhetoric. If the Memorandum of Understanding collapses completely, traders may initially buy dollars, but if the dollar rally stalls, silver could snap back as a secondary safe haven. The second catalyst is Federal Reserve commentary. Rate hike odds at 35% are already low, and any hint of a pause could reignite buying in precious metals. But until those signals appear, the path of least resistance remains difficult. A decisive break below $65 would suggest the correction from the January record is not finished. Conversely, if buyers hold $65 and push back above Monday's close near $65.46, sellers may lose control. The takeaway today is not simply that silver fell. It is that silver has fallen because the market is choosing the dollar as its fear trade, even as US-Iran peace uncertainty deepens. The metal is now testing a psychological battleground near $65, less than half of its January record above $121. For traders, the key is to watch the dollar index and Washington and Tehran headlines, not just the silver chart in isolation. If rate hike expectations stay near 35% and the Federal Reserve sounds less hawkish, silver could find a floor. But if the dollar keeps absorbing safe haven flows, this correction still has work to do. Keep your risk controls tight, because a single headline can reverse the daily trend within minutes.